But let's talk about specific stocks and sectors which will be in focus today. And Somit is joining us for that. Somit, GRMs have fallen quite sharply, almost halved on a month-on-month basis. What are the implications exactly?
Well, on a day-to-day basis, in fact, it has fallen around 35%. Yesterday, it was at around $6.9 per barrel, and current rates are around $4.5 per barrel. Now, the current level that we are seeing of 4.5 is the lowest that we have seen since November 27, 2023. 2024 peak was in around Feb 13 of around 9.9, and from that, it has literally halved. Now, the potential reasons behind this drop in the Singapore gross refining margin could be the rising refinery utilization rates that we have been seeing in the US market. Apart from that, product-wise, if you see, is the petrol and the diesel cracks that have nearly turned into the negative territory. Now, yesterday they were in the positive territory, and these two products have the highest weightage. At least petrol has the highest weightage of around 42%, and that's one of the reason why the Singapore gross refining margin has come down to around 4.5 from 6.9 that we have seen earlier. Now, what could be the impact of this on the Indian oil refiners? Now, do remember that for the impact to play out on the Indian oil refiners, the $4.5 rate needs to be there for quite a long time, at least for a month, and then only the impact will be felt on the financials of this oil refiners. Now, generally, a $1 per barrel drop in the gross refining margin impacts MRPL annual EBITDA by nearly 1,000 odd crore rupees. For Chennai Petroleum, it lowers their EPS by around 30%. For Indian Oil Corporation, BPCL and HPCL, which are India's largest oil marketing companies, their earnings come down by around 14 to 16%, and for Reliance Industries, their consolidated EPS decreases by around 4 to 5 odd percent because of this $1 per barrel drop in the Singapore gross refining margin. So, if this prices now continue to sustain at around $4.5 per barrel, there could be an earnings impact coming in for all the oil refiners, including Reliance Industries as well.
Kunal, what's been your reading on the charts? Reliance, of course, has begun its up move. The other oil refiners as well, supercharged up. Will the momentum stay?
I think the momentum should sustain for these stocks. Now, in fact, even for Reliance Industries, the stock had gone through a 150 point correction last week or so. But the way the stock has recovered in just a matter of, I think, couple of days post that. So from, I think, 3,000 levels, the stock fell to 2850, 2860 levels. And from there, it's just recovered back again to the 3,000 mark. And, these are very rare kind of instances for a stock like Reliance, because it's traditionally not a high beta stock, and it doesn't go into a very easy kind of a 100, 150 point correction. At least that's what the recent charts have been showing. So that's a dramatic change of behavior for the stock. But the fact that it's come back about the 3,000 level and not sustained below at those lower levels is probably an indication that there is strength for the stock. And same goes with the other stocks in the same peer as well.
Okay, that aside, let's move right on then. And it's interesting to actually see the underperformance that we've clocked in within the FMCG index. While for the last, on a year-to-date basis, the Nifty has gained about 3%, FMCG, Somit, has been the worst sectoral index.
Well, more than FMCG, we should actually focus on Mahanagar Gas, I would believe, because yesterday's the fall was around 16 odd percent, which was quite surprising for everyone, given the fact that there were multiple news flows. In fact, the one news flow that came up was that the infrastructure exclusivity has ended, but that actually ended quite a long time back, and despite that, the company has never seen any competition coming in their geographical areas. And the second news was the oil ministry comment where Hardeep Puri said, in fact, on the sidelines of the 12th city gas auction, that city gas distribution companies are earning supernormal profit and they are not passing on the benefits to the consumers. And coincidentally, what happened yesterday was that Mahanagar Gas also reduced the gas prices, CNG prices to be specific, by around 2.5 rupees per kg. Now, the reduction in the CNG prices was purely on the back of the fact that LNG prices have come off sharply from $12 per barrel, $12 per MMB2 average that we had seen in the third quarter. LNG prices are now averaging at around $8 per MMB2, and that was the only major reason why actually MGL went ahead and reduced the CNG prices. Apart from that, today IGL has also reduced the CNG prices by around 2.5 rupees per kg. But that was a knee-jerk reaction that we saw in the share prices. That is what Nuvama believes, and they have continued to maintain their buy rating on the stock with the target price of 1601 rupees, and they're saying that this knee-jerk reaction where we have seen a 15% drop is an ideal opportunity for anyone to accumulate this stock. And they're also saying that the 2.5 rupees price cut was could drive volumes going forward, and they will keep the margins also at a normalized level. And they're also saying that monopoly in the pipeline distribution business will continue for Mahanagar Gas till perpetuity. And they're also saying that the low penetration in the geographical areas that they're currently operating provides a good scope for growth going forward. So Nuvama is quite bullish on the company. It was yesterday Citi who had downgraded its rating on to sell from buy because of these concerns, and they had also reduced the target price.
Okay, and of course, IGL too has reduced its prices this morning, right?
And there are also other players like Adani Total Gas and Gale Gas who have also cut their prices, but this is purely because LNG prices have come off, and also gas allocation, the APM gas allocation might have increased in the Q4 from Q3.
But I think